What do you see sort of as the valuation environment? Do you think boards are sort of in a more realistic deal-doing mode? Do you see them being particularly frothy in terms of expectations? Maybe we'll start with David.
Sure. I think entrepreneurs have options. And I think that is, it could be kind of, the exit is kind of like and when to exit IPO versus, kind of being acquired versus just taking more money and staying private. All of those things are very, very attractive to them. And so I would say, kind of we're competing, but kind of it's a competitive marketplace. It's hard to always make it work, but for the ones that really matter, where there's real alignment between the entrepreneur's vision and kind of what we're doing, I don't see it as an issue.
Mm-hmm. Ken?
Yeah, I think from a valuation perspective, 6 months ago we thought that private valuations hadn't adjusted nearly enough given what had happened in the public markets. We're back to where things seem a little bit more reasonable. Naturally as a buyer, I always have to say valuations are too high, but they're at least a little bit more reasonable than they used to be. What I would say is that it's still pretty tough to IPO these days. And so we see a lot of companies that talk about an IPO option, but when you look at those that have made it out, the requirements around growth, profitability, and just forward trajectory of the business are still pretty extreme. And so while I agree with David that entrepreneurs always have options, I think the corporate acquisition is still going to be the dominant path to exit for at least the next 12 months.
Yeah, and I would say that we see some of the same dynamics. The thing I would add is that if you went back 6 to 9 months, despite the fact that there were certainly entrepreneurs and VCs on the private market side who thought, from my perspective, who I thought had pretty unrealistic expectations. The reality was that you didn't have, you clearly did not have the set of alternatives that seem to be appearing today, right? I think that there's sort of a bottoming out that's happened, but at the same time, there is a lot of talk, and certainly there were sessions probably earlier in the day that talked to this, where there's a lot of froth around whether the public markets are going to open up again, and that may or may not happen. So we'll see that play out over the next couple of quarters. But the reality is that you can prepare for an IPO, but you ultimately may never get there if the market begins to beat a retreat again. But one of the things that we have seen on the larger side of things, if you look at the range of transactions that we do, there are deals in the single-digit millions of dollars, which are increasingly rare, and there are transactions that we'll do which tend to be a bit larger. And we haven't seen the level of competition over the last year from private equity and sponsors, and I think that's beginning to change. Right? So for those of you who tend to be at the other end of the spectrum, I know it's not that many in the room, but just to be responsive to the broader question, we do see now a bit more activity from private equity and sponsor buyers, and I think banks willing to come and lend into the market again. So I think that's an interesting dynamic, which ultimately, in a sense, trickles down to what's happening in the venture markets as well. So I do think there are more options, frankly, today than there were 6 to 9 months ago. But at the same time, we're going to be very, very tough on valuation, and I think ultimately fair in all the deals that we do. And just to give you a sense of that, over the last 12 months or so, despite the fact that there really haven't been that many deals that have happened and not a whole lot of competition for transactions, we've walked away from as many deals as we've done. And we'll continue to evaluate transactions and companies based upon the merits. And we've got to run the same models that we run to build internal businesses, and that's the analysis that we're going to do.
Doug?
So for you guys, I think about what is it that your receiver is going to get out of this acquisition. I don't think that any of the firms I know of are desperate for an acquisition. Most of us are big enough and have diversified enough businesses where if we don't get this thing, there's another industry sector or another technology we can jump on that would make up for those revenues. When you're the size that most of us are, you need to generate $500 million to $1 billion new businesses. The advantage that most of the organizations that attend conferences like this have is we've got a 5,000 person sales force with about another 20,000 people surrounding them that are just chomping at the bit for more stuff. Our real asset is the sales distribution capacity, a lot like a big pharma company looking at the biotech assets they can buy. The handful of acquisitions that I was the champion of and drove literally went up 30x from in 2.5 to 3 years from the time of purchase, because we just fed a great thing to this hungry pipe. And valuations were, I thought, in those cases, were way too high for the revenue and characteristics of the company, but the payback we got made the case an open and shut case. So for you guys, I think the key is find a line of business owner within the organization. Corp dev is your friend, but isn't usually the person that's going to be ultimately responsible for the economic characteristics of the justification, and get that person lathered up. Because for that person, the 1 or 2 or 3 things that are in that category could be the only thing that matters. Right? The things I got excited about, I didn't have much choice. If I wanted to be in the governance, risk, and compliance space, there's a known set of entities. There are a couple high quality ones we're going to pay. I was going to try and get our corporation to pay whatever it had to pay to go pursue this lucrative market category. And that's how I think you can get the valuation equation tilted in your favor.